Aloha and welcome back. Today we're going to talk stocks. All right, Greg. What are some of your questions?
Well, I'm totally new to this.
Okay.
All I can do is read watch how the stock markets move.
Okay.
And like this past week has been pretty awesome.
Yeah.
But as far as investing,
Mm-hmm.
no clue.
Okay.
No clue at all.
That's a lot of different people. Even me, honestly. I mean, I know, for seriously. It takes a little while to really, for sure, know that this is your circle and that's where you should stay. Up until that point, you tend to start throwing a lot of darts into the wind and hoping they land. But that's okay. That's usually where we all start. So what kind of stuff do you like to invest in now? Like, what are some of the things not necessarily stocks, but in life? What are things that you find investments?
Not stocks.
Yeah. Anything that you would find an investment. Like anything that you think will gain worth over time. Like, it doesn't have to, okay. For instance, I've known you long enough to know that you play drums.
Yeah.
Does your drums appreciate value over time, you think?
I would say no. I'd say they remain the same.
Okay, that's pretty good. It keeps its value.
Because what I upgraded to 2 years ago was a Roland. Ended up being about $6,000.
Okay.
And if I were to sell it, of course, to get it to be sold, it's I had to some discount on it.
Yeah.
But prices keep going up.
Sure.
So if I was to sell for $5,000,
yeah,
I'm sure I'd have a lot of buyers.
Okay. That's called liquidity then,
okay.
Right? So it's the same thing with the stock market, right? So let's say you bought something at a certain price and you have to get rid of it right now.
Yeah.
You set the price lower because you know it'll sell because the actual price is right up here, right?
Yeah.
It's the same thing in the other direction. You're like, okay, this is far too low. I'm going to buy it here and I'm going to set to sell it up here because this is what it should be selling at, and then you wait. So it's the same thing with any kind of investment strategy as well. It's just knowing what you know about, finding a way to invest in that in some way, some sort of exposure. You deal with a lot of cattle as a person who has a ranch, and now you can actually predict the price of the cattle prices in prediction markets.
Yeah.
So you can go to Kalshi and you can predict what the price of cattle will be at the end of the month and make profit off of that, yes or no. So it really just depends on finding what you already love and know, and then just moving assets or moving money and capital towards what you already know, because it's the least stressful way to invest, and then you don't have to remember anything. You don't have to think about anything. It just is, right? Because you already know that sector, right? So that would be my first. If I was giving any kind of advice, which I don't, I'm not a investment advisor. I cannot give advice.
No, I got you. No, as far as if we were 20 years ago investing in tools, like Snap-on, which I did, they hold value.
Yeah.
And they're one of the best tools you can get.
Snap-on is a great franchise too. I'm not 100% sure, but I know I see those Snap-on trucks at almost every job site. Lex Brody's. I've seen them down at my dad's place down Kauai High. Snap-on is a great company.
Yeah.
I don't know how. I don't even know what the cost is for a truck like that to start a business.
Oh, yeah, hundreds of thousands.
Yeah.
Because I used to deal with them all the time, and and then we'd have four trucks come in every week.
Wow.
And Snap-on being number one, and then all the way down, Matco and Mac.
Yeah.
And then you'd have the ones like maybe you could buy tools that you can buy today at Home Depot, Cobalt type tools. If it's not your profession, tools like that are fine. Why invest, $200 on one tool that you're going to use 2-3 times?
Yeah.
Or you're going to use it daily or weekly.
See, and
you buy the best you can buy.
Yeah, and that's a good example of utility of whatever you're investing in, right? Like if you're going to use it all the time, like you spent that $200, but you're going to get $1,200 out of use out of it, then you spend that $200. But how long will it take to get to $1,200 use? I'm not 100% sure. Will the asset depreciate? But if it adds to your overall portfolio or what you can do with your toolbox, then by all means pick up the quality tool that will last you the rest of your career.
Yeah, and that's how I've felt about lots of things that I ever buy.
Same.
I will buy the best.
Same. the best I could find at least.
Yeah.
In my price range.
Yeah.
It was for me. It would be shears or for cutting people's hair.
Right.
Oh my God! I've got a pair of shears that I had from when I was 16 years old. Still sharp. Still sharpens well. I use to cut your hair today. That thing is 20 years old. It's as old as my career. But I bought it once. And I bought it on like a layaway too. So back when I was working at Supercuts, I couldn't afford these shears, of course, but they had a program where you could, like, they'll take $25 out of your paycheck. I did that till it paid it off, and that was the best like investment I put in myself, because that thing lasts me forever. I've never had to replace it. I've only added more shears to the actual toolbox, but I've never had to replace that size setting. Right, because it's such a perfect size for intricate work that there's really no other shear out there that I would buy for that.
Yeah. I was just when you were saying my main tool that was, because I was a truck painter. And the body mechanic, and was my spray gun.
Sure, yeah.
You can't go cheap if you're doing, monthly. You're doing trucks, painting a truck. Prepping it and painting it. And luckily, buying. There was a lot of companies that were like you. You could pay payments.
Sure.
Especially like with these Snap-on trucks.
Yeah.
You just pay a weekly payment, and therefore. But if you had to come up with, $1,000, I'm talking 20 to 30 years ago.
Sure.
Still, $1,000 back then is a lot of money.
That's a lot of money.
So to output right then, no. So if you can pay them $30, $40 a week,
because you're taking that tool, and you're making the money that you were paying off on, right? So as long as you can keep your gains higher than, and I would imagine it incurs some interest, right? So you have to make that weekly payment plus whatever interest it has, which I imagine is not great.
Minimal.
That's good.
Yeah.
It's not like a car where you're like 12%, 20%, something dumb like that.
No.
So Snap-on, like being a great business that they are, they know their market, they know how to price their market, because they want to get their tools out there. Because the more people who use Snap-on, the more people who come into the shop see people using Snap-on. It's free advertising, right? I mean, why not we just take a look at Snap-on? Right?
Yeah.
Right? I mean, that's a great way to kind of think about that for a second. Let's take a look at what Snap-on looks like.
And these places that do make these tools, they will make multiple companies' tools. It's just a little bit more high standard for a Snap-on. The metals in it, or
of course.
But the same warehouse.
Harbor Freight exists for a reason, right?
Yeah.
Okay, so here's the stock price of Snap-on from that same time period. And it is $380.27 at the current price. It followed the trend. You can kind of see the candle there. That it followed the trend and went up with this week. So what I can see from I've never looked at this chart before. What I can see is that at least it followed the market we're in, right? So if the S&P 500 goes up, Snap-on will also go up. So that's good. Let's see. So so this looks great actually. Like, this is a strong buy.
Yeah.
Like if I was to look at, because you think we just talked about the reason why it would still be here in the future.
Yeah.
Right. Now this isn't a dividend stock. Obviously, this is a single stock pick.
Yeah.
But there might be an ETF out there that maybe we can find that would have Snap-on in it. But you can see this is from 2020. This chart, you can kind of see it has been nothing but up.
Right.
Right. And because Snap-on is not necessarily a news type of company, right? You're not going to hear the news talking about Snap-on, no controversies, right? So you're not going to get news swings. So that's also what I look for in sort of a stable stock is the news talking about it. Because if it is, then you're going to expect up and down more than it would be based on pure fundamentals like this. Snap-on's great, long-term use case is there. There's not really a reason people wouldn't be buying Snap-on into the future, even now. Like, because tradesmen are going to go up, there are going to be more and more people who need Snap-on tools, and if they can integrate some sort of maybe AI into designing their new up-and-coming tools, they could be a $500 stock like 5-6 years from now, easy. But you can see they have a natural uptrend, so even without that AI or so integration, I'll throw AI at anything, but without that, they're still going to be a strong company, right? So that's kind of all you have to think about when you're looking for a stock or any kind of investment strategy is, because we talked about one company, but now we can talk about we can go back to cattle, or we can talk about metals, right? We just talk about one sector, right? It's the same kind of thought process. It's like, okay, is this going to be useful in 10 years? Like a good easy one is water. Buy water. You want it to never go to zero? Buy any company that's doing water, because the humans need it forever. Right? Or another boring one would be like Clorox, right? Because humans need it forever.
Oh, yeah, I see what you're saying. Yeah.
But if you want to start, so then you can take those kind of people need it forever thought processes and find an ETF that has a basket of something like that.
Right.
Like makes 4% or 6%
Yep.
APY, pays out monthly on a sector like commodities, right? So you can go that route as well. So really, you just have to kind of digest what you're comfortable exposing your money to, and then what you're comfortable making money off of.
So when I'm looking up on like the websites that you gave me last time, tips.
Yeah, tip ranks.
So if I was thinking of a basket that would have something that is something that humans are always going to be needing and using.
Yeah.
Do you ever look for something like that you just suggested?
Yeah, looking for something that people need long term. Well, I mean, my time frame is a little bit different, right? So I look for more tech advanced stuff, and I'm invested in energy as well. So ETFs for tech. Here's one that I'm in. It's called Node. This doesn't pay a dividend, but this is an ETF.
Does not?
No, this one doesn't pay a dividend. But there are dividend-paying ETFs from this company. But this is a ETF that's exposed to the blockchain, right? Because I think that's going to be the next strong push in securing transactions, in securing.
I thought it already was.
Well, sure, it exists, but it's not used on a mass scale. Right, so like governments can use it to move information, right? It's almost like a separate internet if you think about it that way. But because there's so many receipts on each block, you will see all the transactions, right? So you can't really say I did it. You can't really hide it, right? Also, the blockchain is open 24/7, 365. So upcoming soon, we're going to see the stock market move to the blockchain. Right, they're going to start having stocks just like you have here. I could get Snap-on, but I'd be buying Snap-on on the blockchain rather than Snap-on on the stock market. And if I'm buying it on the blockchain, for example, I would be able to trade it 24/7, 365. Right, because the blockchain never closes. So on top of that, they'll probably add options and futures on the blockchain, and we'll just be doing massive transactions on the blockchain. So for me, my future outlook is, at least for a small position, relatively, it's going to be the blockchain tech, right? Because then I don't have to go and pick the right company. So if I pick an ETF that's exposed to that sector, whether it's blockchain or milk, the company who designed the ETF that's out there, they're going to pick the best companies and take out the worst ones. So if there's a laggard in there, they're going to take it out and replace it with the best option of that's going to fill that sector still. Because they still apply to a rule that it has to be, I mean, when they promote their ETF, because for instance, the S&P 500 is an ETF. That's what SPY was. So you can buy, so one share is about $700, and you get exposure to all 500 companies in the S&P 500. So that's a basket, a very broad basket, but a basket itself. So as you scale down, you just find smaller and smaller baskets.
So like our investment market is there's a pie chart, and it has large dividend or large small cap,
micro cap,
So like I think, and I really don't know nothing about that. I asked my sister; she gave us a good suggestion to do it this way, and we just let it ride.
Sure. If it's working, don't change it, right?
Yeah.
I would just say maybe just reinvest some of the profits from that's already working, and then try something and see if that works over the next few months, right? Because you always want to test case it, or even not even do with money. You just write down the amount, you write down what the dividend would be, and then you just kind of track it, right? Because you don't lose any money by doing that. Right. But the fastest way to learn that I've noticed is buy one. Just buy one share.
Yeah.
Because what it'll teach you is if it goes up and you're happy, obviously you're great. If it goes down a little bit and you're like not mad, okay, you're in good shape. If it go down a lot and you're real mad, then you bought the wrong thing. But if it goes down a lot and you're just like excited to buy more, then you know you bought the right thing, right? Because you want excitement when that thing you bought comes down. Because then you're like, oh shit, I don't have it. You never have enough of anything, right? So you want, once it comes down, you're like, oh snap, I want more of it, right? So that's a good way. That's a fastest way to learn something without having to deep dive 9-10 hours a day, like I'm reading and researching stuff like that.
Yeah.
Because I don't like being wrong.
No.
I am sometimes. My hit rate is not 100%. It's 50 to 60%. It ranges my take profit. Because I mean, I'll take a loss because I can redeploy the capital faster. Now the last few months have been kind of a downturn, obviously with the way the markets were. So I kept the capital and I just kept my cash until I could redeploy it in what we would call sort of a bull market where things are just up. Because you can kind of just throw it anywhere and it will go because the whole S&P 500 is up.
So when we let's say the fluctuation that we've been having over the last 6 weeks with Iran.
Yeah.
You know, we hear something comes out, oil prices drop. Everybody starts buying again.
Yeah.
And then we have something happens and oil shoots back up and stock markets, people panic.
Yeah, it could.
And
I mean, it ripped down to $80.
So before I forget, this is why I'm bringing this up, is hedging your
hedging.
stock buys. How are you hedging? I mean, because if you're buying a hedged stock for $100,
okay,
isn't it most likely going to be going down along with everything else that just plummeted?
So it depends
10%?
on what you already own. So a hedge is basically buying something against what you already have, right? So if you have, to make it easy, like I have Robinhood stock, and let's say I wanted to preserve where that money is. I could do a few different things. So the simplest thing is to buy a put or a call, right? So you know what a put is? Okay. So a put means that you would make income when that price comes down from where it is currently. That's all it is. So what you could do is like, okay, I like it where it is. I buy a put, and then because I know it's gone up too much too fast, I buy one, and then it makes money as it comes down. So I preserve that top.
Sorry, I didn't follow. So a put.
Yeah.
So it's $100.
Yeah. So you just buy a put, and then if
and it starts coming down.
Yeah.
So how are you making when it's coming down?
So it's the opposite of a call, right? So they're basically contracts on each side, right? So if you were to buy a call from that $100 and it goes up to $110, right? Then you make money, that difference, right?
Yeah.
If you bought a put and it comes down to $90, then you make that difference, right? So you're kind of it's an equal-sided trade, right? So for every put, there's a call on the other side, right? So there's someone who thinks the opposite thought of you,
right?
And you're kind of, and this is the whole world now. You're not like individually going at one person, but you're just kind of anticipating like, okay, from what I know, from what I've looked at, from how long I've owned this thing, when it does this, it tends to do this. So I know that since I've seen it happen before, I want to protect what I have. But other people don't have the same position as you. Some people could be like, okay, I'm already here. I want to make money as it makes this difference. Right. So it's just a very complicated trade, but for you, all you're trying to do is protect what you already own. Right. So on a very simple case, right? So if you were, like, we know gas prices are going up. You can go on a prediction market like Kalshi and predict that the gas prices will go up by the yes, because it's a binary contract, right? It's either yes or no on any question. Right. So will the gas prices go up by the end of the month? You buy the yes, and then you make that difference, whether you bought it at 73 cents and because the contract closes at $1, so you made 27%, right? So that's huge. That's what, 4 times the savings account in a matter of days, right? So it can be risky, but that would be a life hedge, is what I would call it, because I pay for gas. So I'd like I know the gas prices will go up more than the national average here, so I would like to in turn. And if it comes down, fine. Like, I lose that little bit of money, but that's fine. At least I was protected on the most likely chance that something bad happens, because the universe loves doing that. It just gets worse, right? So no, I don't drive a whole lot. So that gas position that I had on Kalshi was not large, but I mean, I wanted to test it out anyway. Like, in all honesty,
when did you get into it? When
I first saw the news that they put mines in the strait. This was weeks ago. When I heard mines, I'm like, oh, they're going to be there a while, because it's a very dumb man's attack, right? And it's very hard to find once you put them out. Even the people who put them out, it's not like they have trackers on them. They're cheap devices, right? So I knew from that point, regardless of what happened, we were going to be in it for at least a month and a half, right? And we're kind of right at that exact spot. Like, I kind of called this on my podcast about that time, 4 or 5 weeks ago, when I started really putting out content. because it was a lot coming out. Like war was happening, news was happening. I was like, well, I've never traded a war before. Might as well try to document it. And from the way I was reading the charts, from the way I was looking at, so bonds, right? You know what a bond market is, right? So the bond market yield was far too high to be affordable for the U.S. to pay. Right? The 10-year yield was like over 4.4%. That's massive. Like that is unaffordable for the country to pay out. So a correction of some sort, I don't know where it came from. It didn't really matter, but something had to happen to that area of the world because it just became too unaffordable for the biggest global economy to make money. And that is not something the president ever wants to do, right? He wants cheap energy, cheap goods, and a strong stock market. Then that war achieved zero of it. But as you can see, once it was done, poof, right back. Right now we're going to see a correction. This was a very violent return. Right? So maybe it comes down a little bit, but I'm not a bear by nature, right? Bulls and bears. You've heard that term, right? So bears want it to go down, bulls want it to go up. I'm pretty bullish, but I'm realistic.
10% is usually what they consider going into a bear market?
It was a correction. It was right there. It went down from peak to trough about 10% and then turned right back around. But that correction was sort of something we were looking at for a while. So back when Franklin was born, my mentors were talking about correction already. So I was sort of anticipating it, and this is the one we were looking for. So now we can expect the stock market to pretty steadily go up, maybe come down and correct a little bit, but then we could see 7,700 on the S&P by the end of the year.
I've just been listening to, because I don't agree with them, NPR.
That's okay. But the information's there.
It's information.
Yeah.
So I listen to them when I'm going up to the ranch, coming home, whatever. And all the experts, financial experts, over the last, say, 5 years, 6 years, 7 years, this is it. We're heading for a bear market. We're not going to reach 30 on the Dow.
30,000?
Yeah.
That would be bananas.
We're not, no.
Because we're over 50, I guess.
Gold. Gold's going to be hot. I think we're going to hit 15.
100?
Yeah. I think it's going to, this is years ago.
Not
that many years,
okay,
actually.
I was like, what? It's over. Yeah. It's somewhere about 5K right now.
Well,
4,700, maybe 4,800.
5,600 was the highest.
Yes.
And it's down to 48 now.
It came up so fast.
Oh, yeah.
That was
silver.
Very... Oh, my God. Well, like 120?
I bought some silver.
Yeah.
For $21 an ounce.
Sure.
And I'm not going to sell it.
Yeah.
Because it's in coins, actual coins.
Yeah,
you can,
very illiquid market.
If something happens in this world, you can trade your coins.
Yeah, exactly. We have some
not paper dollars.
From my wife's dad, my father-in-law. He had this big coin, and I randomly found it right around the time it went up. I was like, wow, what are the chances? What a blessing.
I have like 100 ounces of coins.
Yeah, that's a lot of ounces.
I'm just hanging on to it.
The spot price right now is probably over $70. I
mean,
I don't trade silver. 80, that's huge. Because it dipped down
high
pretty
of
far.
128.
Oh yeah,
128.
Oh yeah. I think we found a decent stability. Like I think it's found that average line that we want things to have. So I hope I answered a little bit of your hedging question. So when you think about a hedge, you want to think about what you already have. It doesn't matter whether it's on the stock market or in life like gas. You want to figure what you want to find is a way to preserve it, or at least make money if it's going to do the opposite of what you want. Right, so like let's say, oh no, cattle prices are going down. You can buy the yes on that and make money as it comes down on a prediction market. And you can just Google any of these things I say, right?
And I don't
like they just introduced commodities like cattle to that. They can do gold, oil, milk, all that kind of stuff.
Oh really?
Yeah. Because it's the simplest type of trading vehicle. So Kalshi is even used by the Fed for data sets because it's faster than analysts can actually predict it. It predicts elections. It predicts everything ahead of time. So Kalshi is used by banks as hedge vehicles, but now they're adding commodities like I said, cattle. Like I saw this last night. I went looking. I'm like, this is perfect for Craig. I saw it. I'm like, cattle, because I mean it's a short contract. It could be at the end of the month or longer. But now that they started it, you're going to get longer and longer contracts. So especially with you being so much exposure to that, you could very well be like, oh shit, I'm seeing something coming.
Just to tell you what the price futures cattle market.
Okay, yeah.
A week ago, it got the all-time high is $3.81 a pound.
Okay.
And it dropped all the way down to say $3.39 this past in the last 7 months.
Yeah.
It had dipped down there, and then slowly it's just been taking its time, but it keeps going up because of information they're gathering from the Midwest. And just this week, with all those Nebraska fires,
Sure.
a lot of cattle loss and all that feed. And we're at 370. We were at 371 yesterday, and it had dropped overnight. Not sure why, 6 cents. But I saw it climbing back up. I haven't looked at it.
Yeah.
So, is that something, knowing that this new hit, that you would bet?
See? No, we don't bet. We predict.
Not bet.
Yeah.
Predict.
Well, just because betting is a guess, right?
Yeah.
What you did is explain to me that guess would be a high chance of probability yes, right? So, because that just sounded like any analyst. Like if you were to just replace all of those things you said about cattle with any other stock, you would have just explained something else, right? So you have an analytical thought process to cattle because you've known it for so long. You can think about it without even thinking about it. Like, I don't know the cattle price. I saw maybe, 288 is what they were predicting might be at the end of the month or something like that. I don't know what that means. I have no relative idea what that even relates to. Is it per pound? Is it per hair? Per nose hair?
These ones that are predicting, though, I find them to be so wrong. It's just like I was telling you, listen to NPR.
That's why I go with Kalshi. Because these are people, because you can only predict by putting money at it. Right? So if you were trading commodities on cattle, you would only trade it because you know what the fuck you're doing. So other people who know what the fuck they're doing think the same way, and they would only put money there because of it. So you're getting an actual skin in the game data set, right? But it's getting hot, so I'll quickly bring this to a close for us. But do you have any other questions you can think of? That's okay if not. We can always pick up again in 4 weeks.
I think so.
But yeah, so.
I have to get out of my current, or my wife's current not money market.
Account, sure. Yeah.
It's with Invesco.
Okay.
Well, my sister had told me this a couple of years. You want to get out of that because of their fees.
Oh, yes. Oh, I covered this on one of my first podcasts. One of the first things that kills any legacy, not just your lifetime, is fees.
Yeah.
It's fees and taxes. And that kind of stuff is what will just kind of kill everything over a long time span. Like your grandkids will lose millions. Your great-grandkids will never see a dime if you're paying too much fees on something. Right? Because you're paying yacht money for someone to drive your boat into the harbor, basically, right?
So going from maybe paying 1 3/4%, all the way down to Robinhood,
zero commission
or
fees.
The next one up she had suggested was, what?
You got Fidelity maybe
1/8%, or
the lowest amount of fees. Because I mean, a fee is not a bad thing. It's just you want to make sure the fee is worth what you're getting. Right. If you're getting a lot out of those fees, then by all means, And if those fees are counteracted with gains, and if you can do the math and project it out, be like, oh, even if I did pay these fees, it would be trivial compared to what I'm gaining for the fees. It's like when you have a subscription, right? I don't mind paying Netflix because of how much stuff you get on Netflix.
Everything's jumping up. I keep getting notices from.
They had earnings yesterday.
Yeah, I saw that.
They took a bit of a tank. Well, because one of their board members just left. The founder and board member left. I think is what the news came out. They dropped like 10%, but they ran up from like $76 to $90. They or $100 over probably. They recently had a stock split, right? So they were $1,000 a share, and then they had a 10-to-1 split. So that's why they're so small, which is good for people who want to get into that investment.
And when you do split stocks, it just helps the person buy, if they only have a limited amount of money, just buy a few.
It adds more liquidity to the market because people are not so afraid to get in there. Also, for option traders like me, now I can get into a position where, because I need 100 shares of something to trade any kind of option contract, whether it's to buy it or to sell it. I need 100 shares of anything because the contract is set at 100 shares of something. So it's easier for me now. I don't have to have $10,000, right, to get 100 shares of something. I only need $1,000 for 100 shares. Right. So that's better for.
So there's no gain. There's no benefit.
There's a benefit for There's a benefit for the holder because now you have more leverage a little bit. Because now you have this many shares, not this many shares. So the compounding is now spread across 10 times more shares, right? So you're getting more.
But the compounding is going to be the same.
Yeah, but it's now across a bigger spread, right? So you might get a little bit more movement because more people can buy it. That's all I'm saying. Yeah. Because you have more shares. And then now those shares together move higher. Right, rather than this many shares moving higher, regardless of the initial price of the split, it's how much of those things you have that could turn into something more one day.
Just thinking of like
Because like if you had one and it split to 10 and it went back to 1,000 per 10, then you end up way more. But thinking that a stock could go from 1,000 to 10,000 a share is craziness, right? So you have a higher chance if they split it to continue to gain a higher thing, because when new investors will look at it and be like, oh dang, it's only $100 a share, and then you get excited. But when you see $1,000 a share, you're like,
right. Okay.
Yeah.
Okay. Then.
Like another good
Totally
example
makes
of a
sense.
company that I would imagine would stock split soon is AutoZone. You want to guess how much their stock is per share?
No.
Take a ballpark guess. Like
Right-
we know
right
Snap-on
now.
is like $300.
Because you just said they're going to split, so it's
They,
going to be...
I want them to split because they're kind of large.
That's what I was going to say.
Yeah.
So they must be high. 450. Oh,
At a zero, actually.
really?
It's about 4,000 a share.
Oh my gosh.
Oh my gosh,
Have
is
they,
right.
Have they ever
I
split?
have no idea. I don't trade AutoZone. I randomly saw it and I was like, "You're 3,500 a share? Why?"
Yeah.
My only guess is because if you know what a moat is, right? Around a castle.
Yes.
So the bigger the moat, the more likely you're not going to get invaded. It's
Right.
the same thing with AutoZone. I think they have no competition, that the people will just keep buying it.
But they could do better if they split that down to where it's only
Maybe.
costing you
But
$200
then you
a
get,
share.
but what happens
like
is
you
you get
said.
more of my investor, more retail investors, then maybe they don't want that. They want to keep it a wall where people like me who don't want to just trade it and throw their price around.
Oh, okay.
Right, so it's a board member thought process on that.
Okay.
All right.
Interesting.
Yeah. What do you think? You
Yeah,
got all-
no.
Yeah. We got
Well,
some,
no,
we got
I'm
some-
going to have more questions for
Oh,
you.
okay, sure. All right then.
But,
Well, thank you for
today's
talking to me
good.
today then. And thank you guys for joining us today on my very first interview with Craig, longtime client and friend. Aloha, farewell, stay safe, and I'll see you on the porch.
Have a great day.